Good afternoon, everybody. Today I'm going to do with you some revision on a Debtors Recon. Specifically, I'm going to go through a question from the IEB 2021 May paper 2. If you're doing CAPS curriculum, please don't switch off. The theory that you've learned is still applicable here, and you will be able to do this question. That's the nice thing about accounting, is that everything that you learn is interchangeable. So all the topics that you've learned, you will be able to do questions from either curriculum. It's just a different way sometimes of asking the questions. All right, let's do a quick recap. So what is a reconciliation? A reconciliation is an internal control within a business. It is a process of comparing either two financial documents or two accounts, or a financial document and an account, like a statement with a general ledger account, and then finding and correcting any errors that have occurred. Specific to your debtors reconciliation, you are comparing your debtors control account in your general ledger to the total of your debtors list. Your general ledger is a summary of all transactions that have been made during the month, while your debtors list will show what is happening in your individual accounts and have a total at the end of the month. So how do we do this? First, we identify the error made. Has it been made just in your debtors control account in your general ledger, or just in your debtors list? Or is it an error that needs to be corrected in both your ledger and your list? Then decide, what should my transaction have looked like? If I'd done it correctly the first time, what would it have looked like? Your third step, how am I going to correct this? Good tools for this is using your accounting equation and or T accounts. After all corrections have made, your debtors control account should equal the total of your debtors list. Let's have a look at the question. Remember, this is question 3 from IEB 2021, paper 2 from May. Okay. 25 marks, they allocate 30 minutes. A suggestion for when you're doing your papers is to stick to the time allocation, whether you finish the question paper or not. It'll just assist you in getting as many accurate marks as possible. What I've done here is I've put the question on your left-hand side, and I've put the memo answer on the right-hand side, but I'm going to still walk you through these step by step and just explain a few things. All right, so the question goes, Ndeme owns and runs a hardware store called the Tool Shed. He allows builders and other contractors to buy on account. So in other words, to buy on credit. The Tool Shed's year end is 28 February. 3.1. On the 28th of February 2021, Ndeme noticed that the balance of the debtors control account was different to the total of the debtors list. This is the very reason that you do a reconciliation. All right. The question is, explain why the balance of debtors control and the total of the debtors list should balance. 2 marks, 2 points. Here's your answer. The debtors control account is a summary of all the debtors transactions. All individual transactions are posted to the debtors ledger and added up in the list. Every transaction is in both places. Those are your important parts. 3.1.2. Show the journal entry to correct the first mistake. The narration may be omitted. In other words, the narration may be left out. If it is not specified that it may be omitted, please remember to put your narration there, whether it is correction of error, bad debt written off, whatever the case may be. So here is the first mistake that was found. And then we went over the information pertaining to the debtors to find out why the debtors control balance was not the same as the total of the debtors list. He discovered the following. Number one, invoice 209 for 4,270 Rand made out to Pete Parker was entered into the account of Pete Powell. So what did that look like? All right. Pete Parker and Pete Powell. What was done? It was entered into Pete Powell's account. Where should it have been? It should be in Parker's account. So our correction is going to be to debit Parker's account and credit Powell's account. And there you go. I debit Pete Parker. I credit Pete Powell, 4,270, 4,270. And I remember that in my debtors control, I do the same thing. And you'll notice that they tell us 1 mark for knowing which one is debited and which one is credited. Okay, so you'll get 1 mark there. And 1 for filling in the columns correctly. So if you've got all of this right, you'll get another mark there. Very good. (3.1.3) Make corrections or adjustments, number 2 to 6, by entering them into the appropriate columns. All right, so this is what they give you. Debtors control versus debtors list. Incorrect balance on the 28th of February, they've given to you. And then entries 2, 3, 4, 5, and 6. They specifically tell you do not waste your time to calculate the new balances. Your decision is my error just in the control account, just in the list, or in both? Let's go through them one at a time. The debtors allowances column in the debtors allowances journal was added incorrectly as to 21,790. The correct amount, 24,790. All right, so debtors allowances will usually decrease your debtors control. So if I've got a debtors control here, my allowances decreases my control. And I decreased initially by 21,790. But that was the incorrect amount. My correct amount is even more. My correct amount is an additional 3,000 Rand that I need to decrease by. So I'm going to decrease further by 3,000 Rand. You can either put a minus sign or more commonly brackets. It does not affect my list. For number 3, invoice made out to build business. Essentially, now they've told us that there is a specific data involved. We're probably going to use the debtors list. Okay. Invoice made out to build business was incorrectly recorded as 16,840. in the debtor's journal. Their invoice was for 16,480. So it was recorded as too high. So you'll take your 16,840, subtract your 16,480 to get 360. It's too high. What do we need to do? We need to decrease it now by 360 in your control account. But your list, specifically for this one, for build business, is also going to decrease by 360. So we're going to decrease 360, decrease 360. Number 4, interest of 270 Rand should have been added to Anne Mugg's account. By naming Anne Mugg, we know it's going to go in the list. The bookkeeper had forgotten to do this and had not made any entries. Okay, so if it's not made any entries, it has to go into my control account. If I'm adding interest, my control is going to increase by the 270, and so is my list. Okay. I've done these. Number 5, Fixit Limited paid 4,950 Rand after receiving a 10% discount. The transaction was correctly recorded in the cash receipts journal, but the bookkeeper forgot to post the discount to their account. So everything's recorded except the discount to the specific account, so to the list. How do we work it out? We're going to have to go 4,950 times 100 over 90. That's going to give you 5,500 Rand. So that's the total that was paid for this data. If you take that 5,550 and you subtract the 4,950, you'll find that the discount was 550 Rand. Discount is going to, not on your control because that's already calculated. They only said they forgot to put it to their account. So it's going to decrease your list by 550 Rand. Number 6, Handy Hire was written off as a bad debt in December 2020. So this debt does no longer exist. It's no longer in our control account. It's no longer on our list. The tool shed received 8,300 Rand from Handy Hire towards their debt in February 2021. This has been entered into the control account, the debtors control column in the cash receipts journal. It has been posted to only the general ledger. All right, so what happened? The bookkeeper got confused and decreased our debtors control account by 8,300. That's what they did. That's incorrect. We need to reverse that. So to reverse it, we are going to add it back to our debtors control column. I hope that shows you how this kind of thing is worked. How we decide if it's too much or too little, how we decide whether it's credit or debit, how we decide if it's control column or list column. Let's carry on. Okay, question 3.2. The tool shed is sent the following statement account of a debtor, plaster master. You'll notice that the date is 28th of February, 2021. But there are transactions dating back to November, December, January, February. The terms, extremely important, the terms of this, 5% discount granted if paid within 30 days of the statement date. The debt must be paid within 60 days of the statement date. Interest is charged 2% per month on balances 90 days overdue. So on this particular statement, before even reading our questions, we can say, all right, so current is going to be our February. 30 days is going to be January. 60 days will be December. 90 days is going to be November and anything before that. It's always good for you to figure this part out whenever you got something of an age analysis, which we do have here. 3.2.1 says, complete the debtor's age analysis as it should be shown at the bottom of the statement using all the figures shown on the statement. So we start with 90 days. You're going to start with your balance and your invoice. Now you can see that's already more than 30,000. So the payment that is made here in January, that's going to go towards our 90 days. And so is this discount, because we pay off our oldest debt first. And it's been calculated here that now that debt is at 22,600 Rand. What goes into 60 days? Anything from December. So 60 days, I've got this one, 12,560. There's a credit note for that. Something was returned, so we'll take that off. That doesn't apply anymore. What goes for 30 days? Anything from January. Not these payments, because those payments went towards our debt from November and before. So our invoice 199 is going to be 30 days, as well as the interest that we charged in that month. For current, it's going to be everything from February. Invoice 205, as well as interest. Now, just for interest's sake, to show you how much they still owe here, this one adds up to 11,330. This adds up to 9,898. And then our current is 16,072 Rand. Clearly, they don't require the totals. They just require what is included. However, if you put the totals in, you're not going to get marked incorrectly. (3.2.2), there is an error on the statement. Identify the error and explain it. 2 marks. So you get 1 to identify and 1 to explain. The error comes in with this discount. The reason being, discount is granted if you are paid fully within 30 days of the statement date. So what happened here was, the bookkeeper said you paid within 30 days of receiving the January statement or the December statement, and therefore you could get a 5% discount on what you paid. However, the bookkeeper did not take into consideration that that payment wasn't for December's date. It wasn't for this. That payment was indeed for our 90 days date. So it was more than 30 days. And here is your answer for that. And that's your 2 marks. Our next question. The tool shed has come to the realization that interest is not an effective way of getting debtors to pay. Discuss a reason why you agree or disagree with this. Explain new alternative method the tool shed can use to ensure that Plaster Master pays within 60 days of the statement date. So you have to give a reason and justify your reason. Don't just say, I agree or I disagree. Please tell me why you agree or why you disagree. And then your alternative method, and give me a good alternative method, something that you think is going to work, and tell me why. So if you'll notice, on the age analysis, we've got owing at 90 days, 22,600. Then we've got 11,330, 9,998, 16,072. Are they actually paying off their debt? Not really. They're just accumulating. So in my opinion, the tool shed is quite right in that Plaster Master is not paying attention to the interest charge. It's not effective for them because their debt is not being paid off. In fact, they're just accumulating more debt. Okay, so if we go and look here, we can see that their reasons are they still have outstanding debt at 90 days. The amount of interest is not enough of a deterrent. And the Plaster Master owes more at the end of every month than they did than the month before. There's 2 reasons. Alternative methods. Now, there are many alternative methods. Clearly, interests and discounts, which they've put already in their terms, are not working. So something drastic, we could say, well, if you get to 60 days and you're not up to date, we're going to cut you off. We're going to freeze your account. That's one. Another one that was suggested in this memo is that if you pay before your terms, so before your 60 days, you can have free goods. It's another incentive. Generally, people respond better to incentives than they do to ultimatums. Positive more than negative. You could even go as far as saying, you know what, if you for 3 months keep within your terms and keep your account up to date, so you never have an age analysis that goes into the 90 days, then you can have a free item or something like that. Anything that incentivizes. The last question here, 3.3. Plaster Master complained that they paid another 10,000 Rand by check towards their debt. So they should not have been charged interest. This check did not appear on their statement. Ndeme found the check. It was dated 15 March 2021. Explain to Plaster Master when this check will appear on their statement and where this check should be at the moment. And then write down in which column of the bank statement, debit or credit, the 10,000 will appear once it has been deposited. So of the bank statement. So let's go and have a look. Keep in mind, 15 March, that's the date of the check. Let's have a look now. The date of our statement is February, 28th of February. So it won't include anything from March. It's not going to include any of our transactions from March, none of the invoices, credit notes, discounts, nothing. In our next statement, on the 15th of March, when we've been able to go to the bank and deposit that check will appear. So that we can tell Plaster Master that on the 15th of March, that check will appear on their statement. Where is it now? That check will be not sitting at the bank because we can't cash it yet. We can't deposit it yet. So that check will be sitting in our safe. And then which column of our bank statement is it going to appear in, debit or credit? Remember, a bank statement is opposite to what we're gonna see, was opposite to our bank statement. So our bank statement, our bank account, is an asset account, in which case we debit increase and credit decrease. So when we do it in our books, we're going to debit through your CRJ. However, your bank statement, the one that you get from your bank, mirrors this one. So it's always going to be opposite. So your bank statement is going to show on your credit side. Okay. I hope that you have found this helpful. And that I hope that you found this helpful and that you'll be able to do a similar question with ease and confidence. Thanks for watching, everyone. Have a great day.